Palisade Radio is brought to you by First Majestic Silver Corp, one of the world's purest and fastest growing silver mining companies.
Welcome back to another episode of Palisade Radio. This is your host, Colin Cattell. Really excited to have a new guest on the program. His name is Dudley Baker. Many of our listeners are probably familiar with his work. He's the founder and editor of CommonStockWarrants.com, and today we're going to have a discussion about warrants. Dudley, welcome to the show.
Oh, great to be here, Colin.
Yeah, I want to start off with a very basic explanation of what warrants are. Maybe you can compare them to options, which more people are familiar with, and we'll go from there.
Very, very, very similar to stock options. So basically the definition of a stock warrant would be it's a security giving the holder the right, but not the obligation, to buy the underlying common shares at a specific price and expiring on a specific date. And that's going to sound almost exactly like the definition of a call option, except call option is not really a security. You and I and any investor in the world can actually write an option or a leap, be the creator thereof, where a stock warrant is actually issued by the company and will trade as a security on let's say on the TSX, the TSX Venture Exchange, or even in the United States. So that's the basic definition, but very, very similar. So a lot of people should not freak out when they hear a new term because it's so similar to a stock option.
So Dudley, a warrant comes attached to a new share that's issued by the company when they're raising money, something that happens quite often, especially on the venture market in Canada. What's the benefit, and why does a company issue a warrant? What's the benefit of having them?
Well, I would go to the point of saying virtually every company out there, especially in the resource space, probably has issued a warrant. Most of them are issued in connection with a private placement. And it's always considered to be like an equity kicker, an additional incentive, if you will, to get that deal done. So it's always just been, for decades, been very, very, that's just the routine within the resource sector as to why it happens. Now, each company, the management and their financial advisors can make the decision that they either do or do not want that warrant to trade. And so most of the warrants that are issued in connection with those private placements will never trade. And so we, in my service, what we are looking for is we are monitoring all of the stock warrants that are actually trading, that you and I and all the listeners can actually go out and buy on the exchange. So right now we've got roughly 200 more or less stock warrants that are trading. So we monitor this list as they come and go, and new ones coming, and do the leverage calculations and everything for our subscribers. And but basically, that to answer your question, it's an equity kicker.
All right, thanks for that. Let me ask you a question in terms of warrants that actually trade, so they get a symbol, and we can talk about an example of one in a short bit. But why and who decides to publicly list the warrants? And I guess it typically goes along with the company with that's issued the underlying warrant being a sizable company.
Now there's a lot of smaller companies, though, that make that decision to list as well. Now, frankly, I and you, if we were part of the management team, I can argue this both ways. If I was the president of a resource company, do I want the warrant to trade or not? I might lean on the other side to say, I don't want the warrant to trade. I want it just to remain private. And if somebody is interested in our story with our company, then you have to buy our common shares, and you can't buy the warrants. Now, of course, I love the fact that with our service, we're following those that are trading. So I can put on a different hat, and I can argue both sides. Some of the company, and I know this has to be part of the discussion in these financing arrangements, as will or will not these warrants trade. So, some of this, as we get some of the big players behind the scenes, the Rick Rules of the world, let's say, they're going to have a preference one way or the other as to do we want these warrants to trade. Colin, I think we're going to talk about an example here in a few minutes. But it's a big company. It's a gold streaming company. They have always made the decision that their warrants will trade. So I like this as an investor because, as you see in a specific example, it makes a lot of sense. But this is always the decision of management and or their financial advisors to make that ultimate decision. Do we or do we not, as a company, want our stock warrants to trade?
All right, so let's talk about this example. It's Sandstorm Gold, and as you just told me before the call, it recently listed. What can you tell us about this example?
Well, this when you start talking about stock warrants, the question is, so why would you want to buy a stock warrant? The same, why would you want to buy a stock option? Why would you want to buy a lead? It's for the leverage. It's for the upside leverage. So obviously your timing needs to be right. You have to have a lot of time, for the execute on their plans and for the market to perform like you want. So I kind of think the timing is really great here on the Sandstorm Gold. This warrant came out, I think it was like November the 3rd, so just less than 1 month ago. So and it's got a 5-year life. So this warrant's going to go out to November of 2020. So an incredibly long life on a big name company like Sandstorm Gold. What they did is they pegged the exercise price here in US dollars. So Sandstorm is a Canadian company but trades on the TSX as well as on the New York Stock Exchange under the symbol SAN for SAN. Now, but they pegged the exercise price at $4 US. So I'm going to keep my example here in US dollars to make this simple. So it recently, as of yesterday, closed at $2.73 with a $4 exercise price. So I'm thinking, man, this is pretty cool. And you got 5 years. So, and right now that warrant in US dollars, it's thinly traded, but it is available. But in US dollars would cost us about 60 cents to buy one warrant. Now, here would be the example that I'd give you. What it is with stock warrants, it's all about, to me, playing the what if game. What if Sandstorm Common goes up to $10? What does the warrant do? This is basically a mathematical calculation. So this is what we do for all of the warrants in our database. So if the stock goes to $10, what's going to happen? Your return from those numbers I just mentioned of $2.73 from the common to 60 cents for the warrant right now, your return on the common would be 266%. So that would be great. The warrant would return you 1,000%. And this is with no premium. This is just true net worth, which would mean what I call a leverage of 3.7 times. So the warrant will outperform the common 3.7 times, which is great. I'm always looking myself as an investor of a warrant anywhere from 1.7 to 2 as a bare minimum. In other words, I want to be rewarded for taking, say, the extra risk of buying a warrant. And the risk basically is just if you have a shorter life. So with a 5-year warrant, this is a no-brainer. Now, it's almost the same example. So if it went to $15, and right now you'd think, oh my goodness, Sandstorm to go to 275, say, to 15 is a stretch. But actually, Sandstorm hit a high in US dollars in 2012 of $15. So, if we get another rip-roaring bull market going here in the next few years, to me, this is very likely that we're going to see $15 or more on Sandstorm. Well, at 15, the common stock's going to return you 450%, which is great. The warrant's going to actually return you 1,833%, 4 times leverage. So in either event, the question I always like to pose to all investors is that if you're looking at any company, whether that's Sandstorm Gold or any company, always ask the question before you buy the common shares, does this company have a warrant that's trading? And if so, you want to look at what are the details, and if it has a life, until expiration that you're comfortable with, which to me is always say 2 years or more, then I've got to say, why would you not want to buy that stock warrant? In this case, you have significantly less money's on the table buying a warrant at 60 cents versus a common up here at $2.73. So you have less money on the table, less risk, let's say, and greater upside potential. So I always want to say it's a win-win. If we find the right company with the right warrant, all the stars align, so to speak, in our analysis, man, it makes it a really easy decision, in my opinion, that investors should be seriously looking at these stock warrants.
Yeah, and many of the best-known speculators in the mining space, I can think of Rick Rule, Doug Casey, Marin Katusa. They're relying on these warrants and always have to really, go from making 10 or 20 times your money in a bull market to maybe 100 times or more. And the interesting thing about your service, Common Stock Warrants, is you've built this database whereby people, even U.S. investors that don't have access to Canada, can find warrants that are publicly traded. They don't have to participate in private placements, which, as you and I know, has restrictions associated to it based on being accredited and being able to even open a Canadian brokerage account as a U.S. citizen. I want to ask you, looking at all the common stock warrants available for gold right now, are you finding the discount that you just outlined with Sandstorm is present with most of them? I mean, is it making sense to buy the warrants rather than the shares in most cases?
Well, there's a few of the bigger companies as well that have the warrants that are trading. Now, again, the clock's starting to tick down on some of these. And Sandstorm has another warrant that's outstanding. It's a warrant B. But it's going to expire in, I believe it's like October of 2017. So right now we're inside of 2 years, and it's actually got an exercise price up around the $14, $15. So we got to hoof it pretty good to make that one work. If Sandstorm performs, man, there's going to be a lot of money to be made on that warrant, because you can probably pick that up at 10 to 15 cents U.S. dollars right here today. But it's a higher risk, because if Sandstorm, if these markets go flat and we don't perform, greatly within this remaining period of time, then that warrant will expire worthless, and so that's never a good place to be. But nobody has that crystal ball. But I think we're going to be rocking and rolling way before that 2017 date comes along. Just a matter, how much we perform here. But some of the other ones have come down, and where the common share price is selling way below the exercise price, like that recent example I gave you there on Sandstorm, that last one. It's like. And that's where the risk comes in. Even though you've got 2 years of life, man, we've got to go so far now. The stock's got to go up 300, 400, 500% just to get us back to exercise price. So there's just been very few. In these quiet markets that we've had in the resource space, it has not been the best environment for a company to come in and do financing. And so we've had very few warrants issued here over the last 6 months, let's say, in the resource sector that are trading. Sandstorm, I was so excited when they came out with this deal just a month ago, because this is a great opportunity with a good company. And so I just ask everybody, always say, do your own due diligence on the transaction. But in my mind, this is one of the cool opportunities right now in the warrant space. And I always say too is like, a lot of the warrants, just like a lot of the smaller companies, are rather thinly traded, and we want to make sure when you're playing this game to use limit orders. That way there is no surprise. You define the price and just put it in. And I always, even if I think I'm going to get an execution on day one, I put it in as a good till cancel order. So if I do not get a complete fill on that first date, it doesn't cost any more money to do that, and I just put it in as a good till cancel order. And but definitely, you always want to use limit orders on these smaller companies, and in particular these stock warrants.
All right, and last question I want to ask you. You're pretty entrenched in the mining space. It's been a rough few years. Everybody knows that. You were just mentioning before the call kind of your hopes that gold would would quickly take a dip down, and that would allow us to start this new bull market. But that would be great in theory. What do you actually see happening over the next couple of years?
Well, right or wrong, I guess I've always been in the bullish camp. We probably follow a lot of the big players, and we've got to be very close to the low and the bottom, at least on a calendar of this down wave bear market that we've been in. And but I think we're going to go up at a minimum, approach the old highs of the 1900, probably take it out and to go higher. And why is that going to happen? I don't have all the answers to this, but I've got a feeling it's going to all take place from the monetary situation and the U.S. dollar and yada yada yada. It's like there's just so much risk in the whole damn world. We're just on the downside of this now. I think I've got to believe the day will come soon that gold will be back in favor and will once again be the choice of many. And high probability, the banks and everybody, we're all going to be on the same page this time instead of them being on the short side. And I'd love to be on the same side with these guys as we drive things up to substantially higher prices. So I see good things. And again, when you come into whether that's buying the mining shares, the resource companies, or the stock warrants, it's all about timing when you enter this party. So if listeners still have some funds available, this is a great opportunity. Whether we're at the bottom today or be at the bottom a week from now, I think we're damn close, and we should be exploring these opportunities today and preparing for the next several years with some great investments. Main thing is make sure the companies that you buy have got some cash in the bank, are not going to disappear on you, and that's the main thing. Good properties, good management, cash in the bank to survive. And before we close, I will mention that in our warrant database, what we did about a year and a half, 2 years ago, we've expanded everything as well into the United States. So there's 150 companies, I guess, that actually in the biotech space, in the pharmaceutical space. A lot of the big banks have got stock warrants that are trading, and there's really a big list of great opportunities. So for those that that are not 100% on board with the resource, we've got some great diversification here within our common stock warrant database. So any warrant that's trading, U.S. or Canada, regardless of the sector that they're in, are included in our database. So it's there's a lot of, I like to say, there's something here for everybody. So we welcome everybody just to visit our site at commonstockwarrants.com and check us out and see what we've got to offer.
All right, Dudley. Well, thank you for doing my work for me there. It's commonstockwarrants.com, and hopefully we'll get you back on the show in the new year.
Okay, great. No, great to talk to you.
Think you understand the junior mining sector, and you think that the participants in the mining sector, junior mining sector, are good people and kind people, hit the bid.
And the world is always going to need raw materials. It's going to need copper and gold and nickel and so forth.
Totally destabilized. Hey, Troll, did you hear what's going on in Yemen, or are you too stupid?